What is going on YouTube? It's Sank. We are back with another one. Now in this drop, coming at you guys a couple of plays and I bring to attention. Before I kick things off, I'd like to help out the channel by hitting that like button because it keeps the show rolling. Alright guys, that's another phenomenal day in the markets, especially if you've been getting active with me during last week's pullback and at the start of this week. And you already know I'm shouting, let's go anytime the family's making money in these markets. So in this one, what I'm looking to do is drop a few gems for you guys, put a few plays in the spotlight, give them some coverage, let you guys know buy zones, sell zones, and how much room they've got to run this year so that you guys are always at the top of your game. Now that being said, as always, in this one I've got a jam-packed one for you, so let's run the first one. So I'm going to kick things off by paying my dues to the newest addition to the channel. That's ticker symbol M, that's Macy's. Now this is a play that you guys are supposed to get in on Monday because today this one's up over 4%. If you add that to what they did yesterday, this one's up 10%. As I said before, Wall Street is making this one far too easy for us at that $15, $16 price level because we know consumer spending power is high. We know there's that pent-up demand to shop, so this play is positioned in the sweet spot to take full advantage of this. Now I know this play caught you guys off guard when I dropped it for you over the weekend to get into this week, but you guys gotta know I've got a ton of plays on my watch list. I've got many tricks I can pull out of the hat, okay? Now it's good to see a lot of you guys getting in on the action on this one and already making great returns. Now that being said, where are we going with this play? If we look at the charts, we were on our way to $20 before this one just got wrapped up in the volatility across the board that brought the play down, which made good entry for us to get on board if we weren't already on board on the play. Now we are looking to take this one up to $20, $21 by year end, so very close to that 52-week high that we've seen on this play. Okay, so I want to let you guys know in terms of making entry on this one, we're looking for under $17.50. So set your limit buys under $17.50, put this one in your watch list or your price alerts to ensure that you guys can get back into the play. You can stock up on the play if you're light on this one, because I'll say there's plenty of upside from this current price point. Now they say some of the best days in the market come after a pullback, and if you look at some of our plays today, you can see why. That being said, let's run the next one. So we've got ticker symbol GRWG, that's Grow Generation. We're heating up now. This one's up over 4%, very close to 5% in the day. Now last week, we know this one got wrapped up on a lot of market noise. The stock price was just completely detached from the fundamentals, but as always over here, we capitalize on those opportunities. That is why we make great returns in these markets. So those of you who managed to catch this one, as I said, in the 30s, $37 that we saw the other day at the low, you guys are in the money at the moment, and I'm expecting a lot of upside in this one. Now they dropped a gem today, they've opened up another retail outlet, made another acquisition, so they're continuing to scale and solidify their position within the industry. So management is on track to deliver their objectives. As I said, when it comes to this play, you've got a laser focused management team who are looking to deliver for shareholders. That is why we've got a great position in this one, and we are going to continue to build at these types of levels because we're looking to close out the year close to that $65 mark. Again, tons of upside on this current stock price. Now in terms of making entry over the next couple of sessions, we are looking for sub $40. Catch them 39, catch them 38. Ensure that you guys get your position on the play in anticipation of a phenomenal earnings that is coming out in a couple of weeks time. Okay, so that's Grow Generation, ticker symbol GRWG. Our next one should need no introduction. That's ticker symbol DAC, that's the nails. Now hold up, if you're a regular on this channel and you're not in this one, I don't know what you guys are doing, because she was moving today and you guys had great opportunity to get into this one at $60 at the start of the week. Now let me show you what I'm working with. I've got 86 shares in the clip. I might bump this one up to 100 over the next couple of sessions if I can get good entry on this one. Now that's why I say you ease yourself into the play, because if you remember when I dropped this one on your radar, they were $70, $71 play, had a value of about $1,000 at that point in time. Now I didn't build out my full position on my first investment. Over time, I built up my position over the next couple of weeks. Now, had I built up my full position on that first investment, I would have been break even or in the red on the play. But because I eased in over time, got a better cost basis, you can see I'm in the money on this play, and there's still a lot more room to climb. Now, those wondering why this one gets so much airtime on the channel, that's because they're positioned in the sweet spot to continue taking advantage of what's going on in the shipping industry. Now, since I last spoke to you about this play, guys, those rates have probably gone up. This is because it's a game of supply and demand. So let me break it down for you. On the supply side, there's still that container shortage. These ports are congested. The containers aren't going to where they need to be. That's just driving up prices. Now on the demand side, we're going for a reopening. There's that strong demand to continue moving this cargo freight around the world, again driving up the prices. So you best believe the management over at the Nails, they're just swimming in the cash right now. And as long as we're going to continue to see this trend in the industry, we are going to continue to eat well off this play. Now that being said, entry on this one is under $70. You guys know I like them in the high 60s. As a matter of fact, look at my average, $67. Okay, so try and get close to my average over the next couple of sessions if possible on this one, if you're looking to increase your position on this play. I'm going to continue to be buying into this one as we go forward, because it's not a quick fix situation. It's what's going on right now with the ports being congested, the demand high. That is going to be a theme we're going to continue to see right through the year. That being said, at these types of levels, that's a cheap price point for the play, because I'm expecting this one to move closer to that $90 mark to $100 mark by year end. Now, would you believe we even managed to top that movement today? So check this out. That's ticker symbol BGFV. That's big 5. This one was up almost 10% on the day, standing $24. Now look at this. We have moved up to that previous zone that we were in, around the $25 to $24 mark, where I said they're showing early signs of consolidation. So this dip that we saw down to that $20 mark earlier this week, just the play being completely oversold, and we've seen that with a ton of our plays out there in the market. That's why I say it's important that in the red days, you guys get busy, get active, make sure that you're picking up these plays on the cheap, because when they rebound, it's easy money. Okay, 10% in just one trading session, add that to what they did yesterday, you're in the green if you guys are picking up this play in the markets. Okay, so in terms of where we're going, as I say, this is just a classic case of Wall Street forgetting how strong the play is moving into earnings season. Okay, they had a blowout quarter in their last one. Now, given, as I say, retail spending, I'm expecting them to follow suit in their next quarter. Now, I've seen this thing move well after earnings announcement. There's a possibility it could do so if it's going to move up 10% off the back of no catalyst today. Okay, so in terms of this one, we are looking for entry $22. Now, we've come off the back of a couple of green days in these markets, and you know, after a couple of green days comes the red day. Now, this is a play that can move more volatile. So check this out. The beta of this one is 2.9, damn near 3. So that means it's going to be a volatile play. So if this one does hit a red day, we do hit a red day in the markets, do expect this one to come down a few notches at that point in time. You guys want to, if you like this one, make sure that you make entry at that point in time, because we are looking to take this play back up to that previous 52-week high we saw in the mid 30s off the back of a couple of strong quarters this year. At that point in time, we'll sell out, net great results, rotate that into another play. That's how we continue winning in these markets. Alright guys, so those are the plays we've got from this one and the moves we're going to be making with. Now you guys just continue to apply what I teach you on the daily. That is the blueprint. So if you've been rocking with the channel, you know what time it is. Now this question comes from one of my Patreon, says, I'd like to invest more into Google, but they're at a high and they never seem to have a pullback that looks to be good entry. What do you advise, please? The same for Amazon too. So to wrap this one up, I'm going to share some with you guys. And I'm sure you all know the feels where you've got a play you're looking at. Every time you do a check-in, the price seems to be moving up. You think the price is too high, you think it's going to pull back. Next time you do a check-in, the price is high, and so on. So let me show you guys how we maneuver in this situation. But first up, let me speak to a Google, which is in the same bracket as an Apple, same as an Amazon, same pretty much as a Facebook. You guys got to realize is we are dealing with the most powerful technology companies in America. Their cash generation is so strong. They can continue to use that to scale their business, move in different verticals, and just stay at the top of their game. So we call these the cornerstones of the portfolio, the engines of your portfolio that you guys just leave in the background to run and continue generating you returns. So I've got my Google in the portfolio, I've got my Apple doing amazing things. But first up, I want to let you guys know these aren't invincible plays. They've done very well off the back of the pandemic, and there's still the tailwinds. That's where they're performing well. And some of them have a degree of inflation protection, okay, like a Google, for example, which can still operate very well if inflation was to come on the scene. So investors haven't been spooked in that kind of play. But I want you guys to know, over time, these plays can drop, okay? You could see a 6-month period where they consolidate or they come down. So the way we move with an Apple, a Google, a Facebook, if we can't catch a pullback, is we continue to dollar cost average into the play lightly over time. And if we do catch a drop in the prices, we have seen drops in these plays, 20%, 25%, 30% even, then you make sure you go heavy, because that drop is just going to be temporary. Okay, so you can make some great returns in a very short period of time when they bounce back. Alright guys, that wraps up for this one. If you've got any questions for me, drop them down below and I'll get back to you. As always, I appreciate you guys. On your way out, light up that comment section for me. If you're new, join the movement, and I'll catch you on the next one.